Joining us now, former Treasury Secretary Jack Lew, and the Obama administration, Mr. Secretary, also talked about the benefits of corporate tax reform and maybe cutting corporate taxes. So you know what the notion of how to do it was in that administration. Looking at what's being proposed here, what do you like about this, and what do you not like about it compared to what the President Obama wanted to do?
You know, Joe, I've been a big supporter of doing business tax reform in particular, but we were proposing to do it in a very different way. We were proposing to do it in a way that it paid for itself, where it was revenue neutral, where you closed business loopholes to pay for rate reductions. We were working in a bipartisan way with Republicans like now Speaker Paul Ryan and Chairman of the Committee of Ways and Means at the time. This is a very different approach. This is an approach which is cutting corporate rates so deeply that in order to pay for those rate cuts, it's going to have to raise taxes on individuals, including middle-class workers. And the idea of paying for a tax cut for corporations by raising taxes on middle-class people, I think is a bad idea. It's bad for the economy, and it's not fair.
People are sitting at home, or they've, on one side, we're hearing it's just a very significant tax cut for the middle class, and then someone from the other side of the aisle comes on and says it's actually a really significant increase for the middle class. What do people at home supposed to think? Why should they believe anybody when you hear such diametrically opposed statements?
You know, there are some things that are just facts.
Well, how does it raise taxes on the middle class?
When you cut the corporate tax rate to 20%,
right,
you can pay for it one way or another.
But how does it raise taxes on the middle class?
By closing tax loopholes on individuals. What you take away the state and local deduction, it's going to raise taxes on middle-class people. You take away 401k contributions, it's going to raise taxes on middle-class people.
We don't know that any of that's going to happen.
We don't know exactly what they're going to do. But the choice is either you're going to raise taxes on individuals or you're going to increase the deficit, because the envelope is not big enough to do it without one of those two possibilities. I think both of those outcomes are bad. If the outcome here is increasing the deficit by $1 trillion or $2 trillion, all that means is passing the bill on to our kids and our grandkids, which means that somebody sitting in a seat like mine 5 or 10 or 20 years from now will have to cut things like Social Security and Medicare to pay for it.
So you don't believe that cutting the corporate tax rate all the way down to 20% will spur economic growth in and of itself, which will help overall? I mean, growth, as many people say, is a panacea for a lot of ills.
So I think that our tax code is broken. We have the highest statutory rate in the developed world, and our effective rate is about average because of all the loopholes. I think it makes great sense to eliminate the loopholes in the business tax code, cut the corporate rate to wherever you can get by doing that. We thought you'd get to 28%. I think you could probably get to 26%. That difference is going to have to be paid for somewhere else, because there aren't enough loopholes on the business side that you can cut. And then on top of the business tax cut, you've got the new loophole being created for pass-throughs. That's going to become an enormous opportunity for high net worth individuals to pay a much lower tax rate. That's just wrong, and it's very expensive.
Debt to GDP increased every single year under President Obama's presidency. Is there not room for it to increase a little bit more if it gives that growth that could then feed paying off the debts?
I think that whether or not you get growth from a tax cut greatly depends on how you do it. I don't believe that just lowering rates necessarily will lead to increased growth. There's an argument that things like more rapid expensing, making that permanent, would lead to more investment. Going from 25 to 20% actually rewards old investments more than new investments. So I don't think you necessarily get the growth. And by the way, some independent, even Republican analysts have said what I just said. The Penn-Wharton model is written by somebody who came out of a Bush administration and the president's alma mater.
Another big story we're all focused on is who might be the next Fed chair. In this day and age, is that appointment one of the most powerful appointments a president gets to make?
Look, I think the Fed chair is always an enormously important appointment. The Fed is one of the most powerful institutions that we have, and the chair is the most powerful individual in it. I had the privilege of working with outstanding chairs from both parties who took a long view and managed monetary policy, I think, quite well. I hope that this decision will reflect those virtues that you need in a Fed chair.
And I know you've seen some of the numbers coming in, not necessarily to your great chagrin, but you know that the Dow's up 26% since Trump was elected. You saw consumer confidence at highest level in 17 years. You're seeing a lot of maybe business investment. You saw back-to-back GDP quarters of 3%. What do you attribute the 2 quarters of 3% to? Because we seem to be stuck around 2% in the previous administration. Will it continue, and what do you attribute it to?
You know, Joe, I think we left the economy in pretty strong shape.
Okay.
And I think that the benefit of the strong economy we left is putting us in a place where if we don't make mistakes, the economy will continue to grow. So I actually think this steady state will continue to be positive unless we do something.
Have we
to break
moved
it.
in from the 2 to 2 1/4? Are we now at 2 3/4 to 3?
Look, I always tried to be an optimist when I was in office. I still try to be an optimist. I think potential GDP is north of 2, but it's not 3. And
what if it is 3? Will you attribute that to how you left it, or will it be to something that changed?
We saw quarters that hit very good numbers, and actually we had quarters better than the quarters we just saw.
Then you expect it to go back down.
You know, we've seen over the last 5-10 years a trend of quarters being very uneven.
Right.
So you got to be careful not to take a short, narrow view. You got to take the long view.
Agreed. But if let's say we get 2 more quarters of 3% plus,
I hope that we can achieve a higher GDP growth. It is very hard for an economy to consistently grow beyond potential unless you see the population growing and productivity increasing. We have demographic issues that are just a constraint that anyone will face right now, and I think denying that could lead you to make some big mistakes.
Let's say that they do tax reform as they're saying they're going to do it, and let's say that we do move to 3% and we stay above 3%. Will you then say that was due to Trump and the tax cuts, or will it then you'll go back to saying we left it in pretty good shape and it was just going to do it on its own?
So, Joe, I think it would be an enormous mistake to have a tax cut that we can't afford based on numbers that are unreliable on the hope that we get where you're going. Obviously, if we get to the point where the economy is growing faster, I would cheer for a stronger growing economy. But you have to let experts like the Joint Tax Committee and the economists at Treasury do honest numbers. You cannot base a tax cut on numbers you make up. If you do, you're going to end up with a deficit that just straps the next generation to a weight that they can't get rid of.
If the tax
Even
plan,
1.5 trillion, you think that's?
I think 1.5 trillion is huge, and
Yeah.
I actually don't believe that they're necessary. Their appetite is now 5 to 6 trillion. So the question is, do we see games being played so that it's a 1 or 1.5 or a 2 or a $3 trillion hole? These are enormous numbers. When we were looking at proposals from folks like Dave Camp, the question was, did they spend hundreds of millions of dollars? This is many times over that.
so if the tax plan passes, as you understand it, as we understand it to be right now, and granted that's fluid, in your view, will that harm the economy? Will it derail the economy from clinching that 2-quarter streak of 3%, as Joe is hoping for?
I think you get a sugar high from a tax cut. So you might see some quick benefit of macroeconomic stimulus at a time when we don't need it. The economy is at full employment. It will potentially lead to inflation if it goes on. I think in the long run, if we end up seeing our debt to GDP go from the mid-70s to 100% in a rapid period of time, that will have a very bad effect on the long-term environment for interest rates and the stability of our economy.
What Wilf mentioned about debt going up every year for the 8 years. So a total $10 trillion of debt. Was that necessary to help get out of the financial crisis, or how do you not look at say, wow, we did 10 trillion, and now I'm talking about 1.5 trillion? How does that not?
So look, I think that you look at what happened in driving up the debt in the 08, 09, 10 period. We had 3 things happening at the same time.
Those financial crisis.
We had a huge tax cut in 01, 04, which we pulled back some later on. We had 2 wars that we were paying for without raising taxes, and we had a financial crisis that threw the economy into recession, so automatic spending went up. What we did, and I'm proud of this, is we stabilized the deficit in the neighborhood of 3% of GDP. We stabilized debt in the mid-70s, and we now have a period of time to look at the future and say, how do we make sure we're in a good place 10 years from now? This tax cut could make that almost impossible.
Do you think the stock market is this a sugar high as well? Larry Summers a year ago told me, unequivocally, right at the very early stages of the stock market move, that this is a sugar high and there's a big day of reckoning coming. And now we're up like 26%.
I've always resisted predicting where the market's going to go because it's not always day-to-day decisions are not necessarily driven by long-term fundamentals. And you know, do I think that we're going to see a correction at some point? We always see a pattern of growth and then corrections. What I worry about is taking an economy that's very stable and kind of putting into a place where you could see a collapse. And that's the kind of macroeconomic policy that you need to worry about. Markets are going to go up and down.
Mr. Secretary, thank you.
Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.